Hi, good afternoon, and welcome to this week's Elliot Wave Weekly Analysis webinar. It's Victor Manena here from Pips Exclusive. So we're gonna be looking at a few charts this evening. It's evening on my part of the world. It could still be afternoon in some parts of the world, or some people are going to bed now. But in any case, good day to all of you. So as I always say, I am not here to do an Elliott Wave course. I'm here to do an Elliott Wave market analysis. Market analysis using the Elliott Wave method. That's all I'm here to do. Okay, so believe anybody who is here who would have read or attempted to read the Elliott Wave principle or is applying them in their strategy somehow. So that's the method I use. So we're gonna go straight into it, starting with the dollar index. We actually discussed this pair last week. So this is the daily chart of the dollar index. As you can see, we've got our wave 5 there that is completed. So after the wave 5, you need to get a corrective wave ABC. Or not necessarily ABC, depending on what the structure gives you. So here you've got a 1, 2, 3, 4, 5 in red. Okay, so we've got these 4 in red that is completed now. So I'm going to go down into the lower time frame, and you can see that these 4, wave 4 in red of wave A has been completed. Okay, so if I'm going to go to the 4-hour chart, so the US dollar is still weak. I did say last week that we were heading for US dollar weakness. That's what we have now. So wave 4 has completed. As you can see, it has broken out of that structure, and it is now giving us this nice correction here. So on the break of this correction, we expect this pair to go down. So that means dollar weakness to carry on. So that's the US dollar index. We are in a correction. We're getting this corrective flag, and then that will give us the down move. Okay. So you cannot talk about the dollar index without talking about the euro US dollar, because that is the exact opposite. So I'm going to look at euro US dollar now. Euro US dollar is exactly the opposite of the dollar index. Let's go to that one. Euro US dollar. Okay. So euro US dollar also in wave 4, but we're anticipating the upside move. So if you can see here, we've got in wave 4, we've got a 1, 2, 3 wave structure. And then after that 3 wave structure, we're getting something like this. Okay. So far you're getting something like a 1, 2, 3, which we call a W, and it looks like you're getting a connector, which is an X. So there are 2 possibilities here. Okay. So if you're getting this WX, if this is turning out to be a WX, then it's going to give you 1, 2, and then 3 to the downside. And this is a expanding flat here. This red is an expanding flat. So you're going to get 1, 2, 3, right? WXY, your 4 will be here, and then we go. That's the one possibility. We go from there. Let me just take off my fib there. All right, but now we have got something like this. We've got this nice impulse here, and we are getting this correction. Remember, the dollar index, we got the breakout of the channel, and then you're getting this correction. All right, so the flag for the dollar index is flagging to the upside. This one is flagging to the downside. So we expect this to happen. Dollar down, euro US dollar down. Sorry, upside. So we need to see what happens in these corrective structures. Okay, so we have flags on both sides. So we need to see what happens when we break to the upside. So that's the euro US dollar. And that's how we're going to look at it. So this will confirm to us if it breaks out of here, we're going to be buying, or it's safer to buy on the break of the top of the flag. Okay. Right, so I want to discuss US dollar JPY. It's a very interesting pair. Very interesting pair with a very interesting structure. Okay, so I'm going to switch off all the labelings that I have here and just show what, if you've seen some of my previous videos, you'll see what I was looking at here. And what you're going to learn here is how to have an alternative count, not changing your bias, an alternative count. And an alternative count doesn't mean that when you have an alternative count, the alternative count is a bad count. It just simply means, because what happens here is when the patterns are unfolding, you like connecting the pieces of the puzzle, and you can't connect them until the market unfolds. So what we try to do here is to anticipate the pattern that will form before it actually forms. So this is what we thought initially with US dollar JPY. Okay, so this is my 4-hour chart. I think it can clearly indicate. Let me go to the daily. I think the daily will be better. We'll come down to the lower time frame. So how does this chart look? How do we label this? What are you looking at here? So we've got the impulse here. You can see that we've got this impulsive wave here. And everything that is happening here is just correction. You can see that it's just correction. It goes, comes back. All right, so that is just correction. Okay, let's get that out. But we need to figure out how exactly that correction is playing out. Okay, so firstly, that's the impulse. Let's change the color for the correction. You can see that we started with a ABC. We started with the ABC here. A nice clear ABC. So after the ABC, let me draw it properly. 1. My mouse is jittery. Bear with me. Okay. So you've got a 1. You've got a 2. And you've got a 3. A very nice impulse, ABC. And then we thought it was going to go. Right? But market had other ideas. It was not going to go just yet. So it makes this sub correction. Okay. So when it did that and it started dropping here, we actually sold it here and it started dropping here. I think most people started seeing what the pattern looked like. So we saw zigzag going there and then the interconnector there. And then everybody thought this was going to happen. We're going to get another zigzag giving us AWXY. Okay, but look now, it's not happening. It's not happening the way we had planned. It has already gone almost to this level. Okay, so this is where you need to anticipate what the patterns are. You see, I'm not even focusing on the labeling. I only just put in the labeling after I've identified what the possible patterns could be. Okay, so you could be having this WXY. My structure, my alternative structure here is not going to change, and you will see what I'm anticipating here. Okay, because now this zigzag has now failed because this has retraced almost 90%, and when you get almost 90% retracement, we are already anticipating a flat correction. Okay, so this is what I think could possibly happen here. I'm going to change the color, make it green. So we've got this impulse here, which is now going down. Okay, so this is what I think would happen. You're going to get this coming down somewhere to the 50%, 61%, going back up. It can either just touch or break there, high there. Okay, and then after that, I'm going to get my red again. Remember, this is my impulse that is being corrected by the green. Okay. Then I get that. And then I get all this all the way down. This has not changed my bias. The only thing that has changed is that instead of having that zigzag that I was anticipating, I now have a flat correction. See, I would now have a flat correction. We are currently here with this pair. We were anticipating that this red will just go zigzag, same way as this one. But now that's not happening like that. We are now dropping to the downside, and I cannot see any other pattern possibility other than this dropping to the downside, to the 50 maybe, 61%, and then going up again, giving us a 1, 2, 3 flat correction. So here you've got a zigzag, you've got an interconnector, you've got a flat correction. So that's the possibility that could happen. So look how easy it is to label this. The first zigzag, we label it a W. Interconnector, we always label them X. Okay. The flat correction will label it a Y. This has not changed the structure one bit. The bias has not changed. I'm still targeting around the 104 area. Okay. So the only thing that has changed is the pattern. The labeling is still the same, right? And then what you're looking at here is a big 1, 2, 3. Okay. So it doesn't change anything. So we are here now. We need to see if we can get a trade. This trade here, the green to the downside, to the 61%. Okay. I can clear all that now. Okay. Let me clear all that. So this is the daily chart. You can see that we've got a very nice pattern there. If you wanted to label this, you can label it with a lower degree red, W, X, Y, everything, you just fill it in, W, X, Y. And don't think that everything is just double X, Y. There is a reason why you label double X, Y, why you label A, B, C, why you label 1, 2, 3, 4, 5. And we know all those rules because we've learned. Okay, W, X, Y. That's USD JPY. So this is the possibility that could happen. So now let's look at the trade, because we don't take trades on the daily time frame. So I'm going to go to the 4-hour time frame and see what's going on there. So the trade is here. We need to see what is going on here. We're going down here now. Okay, I'm going to switch on the labeling now. So don't let all these letters confuse you here. So we're currently here. And we are making this flag here. So this flag, you need to look at this flag. It can be longer or deeper. When this flag breaks, you take the trade, you take the sell and target around there, 51% or 61% of this. Right, so if this makes an impulse to the upside, then you know that it's going to complete that 1, 2, 3 that we were talking about, and then it will complete that 1, 2, 3 flat correction that I was talking about. Okay, so let me just go all the way back to what I was doing here with this and switch off here. Okay, I'm going to go back to the daily time frame and show you how you're going to trade all those things, all these patterns here that I just drawn. Let me clear it out. And if you were to trade, I'll show you the next couple of trades, not just one trade, the next couple of trades that you could have if you were trading this. Remember, they still had the impulse. Okay, we got that nice zigzag as a first correction. A, B, C. Okay, now we're getting this one, which we now think that it will do something like this, giving us a flat correction like that. Okay, our interconnector still as it is. I'm just redrawing this so I can show you how to trade this. All right, so now we are here. This is the daily, so you won't be able to see that flag. The flag you can see clearly on the lower time frame. Okay, so now we are waiting for this trade to drop here. All right, so when it drops here, we're going to see what happens here. We don't just go and buy because it's at the 61. No, we look at other confirming indicators. So this is cool. What could possibly happen? It will come up with an impulse, makes a correction. When it does this correction, we're buying to the upside. When it gets to the upside, makes an impulse to the downside, makes a flag, and then you sell it to the downside. So look, 1, 2, 3 trades that you could possibly have because you are trading patterns. Elliot waves, it's all about patterns, not all these letters that we put on the charts. So 1, 2, 3 trades on one pair that you could have in the next couple of days if this plays out the way we're analyzing it. Okay, so that's US dollar JPY. Right, so US dollar CAD. So US dollar CAD daily. Most of you have seen this a number of times. We've done this chart a number of times. We are still anticipating this big correction. This whole thing is just a correction here. B, C, and we want this to do something like 1, 2, 3, and this is not over yet. Okay, we still want 1,55, but it does not go in a straight line. So look what's happening here. I'm going to clear all that. So this is the ABC, don't forget. Okay, so we are now getting this deep correction. It can be deeper. It can be deeper. You can see that we're getting this deep correction here. And even before here on this swing, we were getting deep correction. So sometimes you need to look at the fractals. Here you got a deeper correction. Here you got a deeper correction. Okay, you get a deeper correction. Here you got a deeper correction. You get a deeper correction. So this one can be even deeper. So let's look at this correction here. Let's look at this correction, and I call it a correction because it's not going up impulsively. You can see that these candles are overlapping. These candles are overlapping. That's why I'm calling it a correction. It's correcting this bigger impulse. Okay, so let's go to the lower time frame, the 4-hour chart, and see what is going on here. I'm not going to put up the labelings. I'm just going to show you the patterns. Okay, and obviously the chart is labeled, so I don't want to clutter the chart with all this. So I just switch it off and just show the rationale behind this, because all these letters are based on the patterns that have been identified here. Okay, so we switch that off. Okay, so Elliot identified patterns. He identified how these patterns interlink with each other to form bigger structures. So look at what is happening here on this pair. This is that correction that I was talking about. You see how overlapping it is. Okay, this is all overlapping. So this is what we thought initially was going to happen. Initially, we thought we were going to get an impulse. We're going to 1, 2, 3 waves. We're getting 1, 2, 3 waves correction, right? And then after the 3 waves, we're getting 1, 2, 3. And then we thought we actually thought 1, 2, 3, and then we go. But it actually did a double. Let's get another one. 1, 1, 2, 3. Okay. See here, after they did a 1, 2, 3, we thought it was gonna go. Still, it doesn't go. It does another 1, 2, 3. Okay. After the 1, 2, 3, it keeps going. 1, 2, 3. Okay. After this 1, 2, 3, we thought, okay, now we must be ready. Another flat correction. Okay. And then we get until we get this one here up to this level. So it was just 1, 2, 3 waves correction. 1, 2, 3 waves correction. 1, 2, 3 waves correction. And here you can see this whole swing does not have any 1, 2, 3, 4 impulsive 1, 2, 3, 4, 5. You put up 5 Elliot wavers here, they're going to come up with different wave counts. Okay. So here it was just simple 3 waves. Don't force it. If it's just 3 waves, label it as 3 waves. 3 waves is ABC or WXY. So if you don't have 1, 2, 3, 4, 5, we don't force it. So now what essentially happens here is that you've got this whole swing here now. Okay, and then now that whole swing is being corrected like this. You're getting this impulse, and now you are getting this correction. So if you get this correction here, you sell it to the downside. But it looks like it's going up now. Okay, we don't know how far it's going to go. So if you get this and then it breaks to the downside, you're selling it here or you sell it here. It's safer to sell it there. Okay, but that does not mean that you're ready to go. It doesn't mean that it's ready to go. You just do that. Doesn't mean that it's ready to go. If it comes down like the way we anticipate, if it comes down like that, it may just be doing something like this. 1, 2, 3. And after the 1, 2, 3, it gives you a bigger ABC, bigger structure. So you can see that this structure started forming with smaller 3-wave patterns to form this larger 3-wave pattern. Okay, so that's how they interlink to form these patterns. Okay, so right now we're on the upside. You can see that we had this flag here. Could have been this flag here, and you could be getting a 1, 2, 3. Okay, or rather, see, there's so many possibilities. So you're getting this impulse to the downside, and this can just come here, break the top, come down, giving you a 1, 2, 3 flat or expanding flat correction before it goes up. So you see, before the market actually goes the direction that you're looking for, it can do a number of things. And when it's still doing that zigzag and all those corrections, that's when it's eating up your account. And when it eventually moves the direction that you're looking for, you don't have money anymore to trade. So this is why you need to anticipate how this market moves. Okay? So for now, if this is not breaking to the downside, I'm not interested in the upside, on the upside on the US dollar CAD as yet. Okay, I'm only interested on the downside, on the break of this flag to the downside. Okay. New Zealand. New Zealand, very interesting. You know, I do this pair every single week and I talk about the same thing every single week, and it keeps happening exactly the way we're analyzing. Okay, so let's look how far we are with our fractal, because we're trading this fractal. We're just trading what's happening on the other side. And I'm talking here like everybody has, I'm assuming that everyone here has watched the previous videos. You see, I just keep the labeling switched off because that's all very confusing. Okay, it's actually not like this. This is just my chart jumping up and down. Okay, so the labeling is like that. So if you look at this is all very confusing. But it's when I do the patterns, it becomes much easier. So try to make life easy for yourself. No? Make life easy for yourself. Our brains think in color. So all these confusing things, our brains don't like. So when you draw patterns with colors, it becomes very clear. Okay, so let's do this. So when you come to a chart like this and you see it just blank like this, you don't even know where to start. Okay? So you get the impulse. Okay? You get the impulse there, you get this leading diagonal that we've been talking about forever. Okay? Right, so after this is how the leading diagonal works. Let's undo that. Change color. You get a 1. My mouse is very jumpy. Okay. You get the nice impulse there. This impulse is so clear. Okay. And remember that leading diagonal, the whole leading diagonal is an impulsive, and I'm looking for A, I'm looking for B, and I'm looking for C. Okay, I'm looking for something like this. I'm looking for something like this. Okay, but right now we're here, and this thing is trading fractal like this. So I said last week that I am looking for this fractal. Here it went up, here it went up, came down, went up, and came down. Came down, went up, and came down. So now we're anticipating that this move here. Okay, right. So we actually thought that it was going to come to the 78 because here it formed this Gartley pattern where we would have bought here on the trend line. But here, if I just put back up that trend line should have been somewhere here. So you can see here, it has just missed it. It has missed it by a couple of pips. So it did not trade to the 78% here, the area where we wanted to buy as we analyzed this the last week. Okay, but that does not change anything. So we got the in any case, we would have gotten this impulse here from the trend line, correction, flag, and then it would have gone up. Okay, but now the only difference is that it's turning up a lot earlier than we anticipated, but that does not change, or that doesn't mean that we're going to miss the trade. We won't miss the trade. Okay, so let's undo all that, or maybe clear that. So we are looking for this here, where we see that we've got this impulse now here. This is the impulse that is starting. We already got this 1, 2, 3. We already got this 1, 2, 3. We thought it was going to come down here, but it did not do that, right? Instead, it's turning here. So we've got the impulse. So when you get the impulse, what we wait for is a corrective structure in the lower time frame, then we are ready to take it up with us. Okay, so this is the daily time frame. I'm going to go down lower and switch on the labeling as well. Lower 4 hours. For hour. So that's that impulse that I was talking about. So I actually sent this chart to the premium group this morning, indicating that we got the impulse. Now we do not just rush into the impulse, because what would happen is you got the impulse, you cannot just say I'm buying here. What if this thing starts doing this? Starts giving you a correction to the downside, and you don't even know where this correction is going to end. So you wait for it to give you this correction in the lower time frame, and then you're going to actually buy when you break out of this flag. So that's what we're looking for. Now, we got the impulse, now we're looking for the corrective structure. We do not rush into trades. Okay, so this is the 4-hour chart. If you look into the 1-hour time frame, you will see how beautiful this corrective structure is forming. So I do not care about missing this here. I would rather have a high probable trade than a good entry. So I'm not interested in a good entry. Not that I'm not interested. If I could get a good entry that is safer, I would take it. But here, if I was just taking it here, there was a possibility that this was a flag and it will still go down, because we were actually anticipating that it was going to go down. So now I'm not just going to buy this because it's going up. You don't just buy because it's going up. You don't just buy because it's going up. So because wherever you buy, you may get a correction, as I was saying, that just do this to you. And then while it takes you out, and then it actually goes the direction that you're anticipating, by that time you probably don't have money anymore in your account. You've lost a lot of money, or you're not interested in the trade again, because you've now lost money. Okay, so this is a 1-hour time frame. We're getting this flag here. Excuse me. This is what we're going to be looking for. Okay, so we're looking for something like this. Okay, this flag. Only when this flag breaks out of this, we are buying. Okay, put our stop loss somewhere here, just on the flag. Then we're buying for many, many pips to the upside. Okay, so just to indicate how many pips we're anticipating here, go back to the daily. So we'll be buying it here. We'll be buying it here around the 72 area. Switch off all this drawings. So what we are anticipating here is this. Is this A, this is B, and then we want a C that is almost the same size as this. So you can count how many pips we're looking for here. 81, over 1,000 pips almost. Okay, so it won't go as fast. Look here how long it took here. So it may be just as slow. Okay, so that's New Zealand, US dollar, Audi US dollar. Okay, Audi US dollar on the daily. Beautiful structure. I'm not going to go through the whole detail like I did with the other chart. I'm just going to go into the trades. So if I switch this on, you'll see that there's an impulsive wave, 1, 2, 3, 4, 5 here, 1, 2, 3, 4, 5. And somebody can ask me why I didn't put my 3 here. That's because of the rules that I apply. Okay, I've got rules. This 3 needs to be above 1,618 extension, not retracement. Extension, using the extension tool. So my 3 was here. So I wasn't gonna go put it up there. So the first wave, the first peak that has got a 1,618, that's where I put my 3. So that's why I've got this 1, 2, 3, 4, 5, and then extended with 5 here. Okay, but look how it is happening after the wave 5, something very beautiful, and that is a expanding flat. Switch this off. So you know there's a 1, 2, 3, 4, 5. Trading is so easy. You get this impulse. 1, 2, 3. This is an expanding flat. This in red. It's a flat correction. It's going sideways. It's called a flat because it's correct sideways. But this one is expanding. It breaks the top. It breaks the A. Okay, this is the A. This is B. This is C. Expanding flat breaks the top, breaks the B. Textbook stuff. Okay, so now after it comes to the C, and we know how much it must extend from the B. Those are the things that we learn in our class. We know how much it must extend. That's 1,61 extension of this one here. Okay, so now what's happening? What are we waiting for? This is the daily. We want this something like this. But we don't want this flag on the daily chart. We just go to the lower time frame to get an entry point. We've got an impulse and a correction. What should happen after the correction? We need to get another impulse. So which means there's still more upside on this. Okay, yes, there is a possibility that this can do a double. Okay, let me just show you what the double correction could look like quickly. So a double correction we may get something like this. All right. And any other correction there. So this will be your W. W representing your first flat. Actually, I should have done this one in red. This should be in red because it's in the same degree as the first one. So this can be anyone. It can be a zigzag. It can be any of the flat corrections, or it can be a triangle. All right. So all of that will be a W, X, Y. Okay. Let's pull that back out. Okay. So if you've got that as your Y, okay, my chart has shifted now. Let's take it back. I can actually do this quickly, clear that. Right now, we are not going to wait for a double, but this is how a double could play out like. Impulse. After the impulse, you get your red. Expanding flat. If we were anticipating a double, this is what could possibly happen. Okay, and then you get another correction, maybe a zigzag or whatever, and then this will be a. Remember, the market does not go in a straight line. We know the direction is up, but it may not go the moment we want it, and this is how we lose money in the market. Not anticipating the direction or not anticipating the right move at the right time. Okay, so even if you were here, you knew that it was going up when you were here, but look what it did, took you out. Okay, then you got this Y here. By the time you get to the Y, you're already tired, you've lost money. We just wait for the impulse, get the flag, and then we take the trade all the way for a lot of money. And this has not changed the structure at all because it is simply a impulse, 1, 2, 3. 3 waves. Okay. So that's the possibility that could happen. But I'm not anticipating that for now. I am just going to buy here in anticipation that this thing is going now. Doesn't matter if it goes here, I'm going to move my stop to break even, let it run. If it comes back and takes me out for break even or small loss, it's okay. I know when it gets to Y, I'm going to do it again. If it gives me another one, it gives me 3. I know when it gets to Z, there's no other way. It's only going one way and one way only. My direction, the direction of the impulse. Okay, so if it does that and gives us a WXYZ, we know that there's nothing after the Z. It must go. So I like the triple correction because after the triple correction, there's no more assuming or guessing or anticipating any other thing. There's only one direction. Okay. The guys in my group call it a 10 lot size for the trade. Okay, so that's what we're looking at with the Aussie. Looking at the lower time frame for hours. We're looking here. We want this correction here. You see here, textbook stuff. Posted this morning after this impulse. So somebody after you see this impulse, you would have wanted to just buy. You wake up, you find it going up, you just buy. Look what happens. You think, oh, it's going down. It's taking you out for a loss. By the time you close your trade, because you don't even put a stop loss, then it starts going in the right direction. Okay, so this is how we're going to take it. This is what we're looking for. When this flag breaks, we go with it to the upside. Okay? You need to know when the trend has reversed and when the trend is correcting. Then you know how to trade this correctly. Right, gold. Let's look at gold. Gold is very simple. So I'm going to go to the daily time frame. I've done this gold form when this pair was still here. We've done this whole analysis. We've focused on all these moves. Okay. So now, when you've got an empty chart like this, where do you even begin? Look at this. Where do you start? You get 1, 2, 3, 4, 5, A, B. Where do you even start? Okay, so you need to look at the patterns. Look at the patterns that it's doing. So here's the pattern that it's doing here. Simple. Impulse. This whole thing is just a correction of this. Okay, and how is it correcting? Look at this here. You want this leg to be equals to this leg. This is why I am focusing 1,376 on gold. That's where this, I'm going to have equal legs of this. And this also fractals happening here. Look what happened here. Impulse came down. Impulse came down. Exactly the same, eh? What happens after it comes down? Makes an impulse, cow goes and breaks the top. So I'm anticipating that it will do this impulse, it will go and break the top. Okay? Simple. So exactly what is happening here on the left is happening on the right-hand side. But then how do you trade it? That's where the trick comes in. Anybody can know the direction, but the problem is how to trade that direction. Okay? So this is how we trade this direction. We know that we are here. What we need is something like this here. If you missed it, some of the guys in the group took it from around here. Obviously, there's a flag here. You just won't be able to see it on the daily. When I go down lower, you will see. There's a flag down there. So here, you've got this long correction. I'm calling it long because it's daily, and when you go to the 1 hour time frame, it will be a longer flag here. So what you want to do here is wait for something like this. Exactly something that looks like this. Break to the upside, break the top, you've reached your target, your trade comes down, and then your correction will then now could be finished. And then what you have is a very clear, and when you label it, see I only label afterwards, W, X, Y. Why am I labeling it a WXY? Because it's not 5 waves. Why is it not 5 waves? Because here, not like that. Let's do this. This is 1, 2, 3 waves. Here's 1, 2. Anybody who sees 5 waves there, they're forcing the bias. There's no 5 waves there. See, it's just going in threes. Just going in threes. I can do this all day, going all the way to an infinite time frame. Look at this here. This red has got 3 waves. I've done this before, actually. This red has got 3 waves. It's 3 waves everywhere. So what are we anticipating here? Another 3 waves somewhere, and this one is where we're anticipating that we're gonna get that flag. So this flag could be here. Okay, then we get that. See how easy it is to trade that? So now we're on the daily time frame here, so we need to see a flag. So you can see New Zealand, Audi, and gold, US dollar. We've got the impulses. Now we just want the corrective flags to enter. So this is how it's going. Some of the guys took it on this flag. Someone took it on this flag. Okay. Somebody could have taken on this flag, but this one is not so nice. But every time you get a flag, I mean, here you had this. This was going down in a channel. Let's undo that. This was going down in a channel like this. I was going down in a channel, and I said in the group, Don't worry about gold. Only look at gold when it breaks out of this channel. And then it broke. So when it breaks, then we start looking for the flex. Okay, here's the first one. Not so nice. You could have left it. It's fine. But look at this nice deep one here. This was a textbook one. You got it. All right? And we keep getting it. And when you keep getting it, you keep buying it. Here, there's another flag. Okay, here, a pullback. Okay, so here, you're probably getting another one. You're probably going to get another one here. Probably going to get another one because we are anticipating now this to do that so that we can get to that 376 that we've been targeting for the longest time. But it does not go in the straight line. Right? The market does not go in the straight line. So that's how you trade gold. 1 hour time frame, get a nice flag. Get a nice flag. When it breaks to the upside, take it. Okay. That is gold. US dollar ZAR. Let's go higher. 4 hours. We've traded this very nicely. Very, very nicely. Okay, I also showed I don't know why my screen doesn't want to move anymore. All right, so this is what we thought initially with US dollar ZAR. Okay, we thought it was making this triangle, and then we were getting this Gatli here. Okay, we're getting this Gatli there. I'm gonna switch off again. Gonna put on the label when I put on the drones from trading view, it brings up everything. So, and I don't want to see everything. I just want to see the annotation from the Zoom platform. So we bought it here, thinking that it was gonna come here to the triangle. But look what it does. It actually gives you the target of a Gatli. And the target of a Gatli, if I switch everything off here. So this is your Gatli pattern. I'm gonna draw it freehand. This is the Gatli pattern that we were looking within this apparent looking triangle. Okay, so we know with the Gatli, your target is the length. This length must be exactly the same as this length. And if you go and measure this, this is exactly the same. It's exactly the same. And after that, this just drops like this. Okay, so some of us had our targets here. But we did say that this could come and take here. But it didn't. It just almost touched there. But why was it doing that? Because we had this here. Even if I take off this pattern, look at the Elliot wave pattern here. This is an advanced pattern. I always combine Elliot wave and advanced patterns. So here you had an impulse. Okay, after the impulse, you had a regular flat. Does not break the top, just comes around almost 90% or touches the top of the impulse and comes down. Okay, so after doing the regular flat, the correction was done and then it gave us the other impulse. So it's impulse, 1, 2, 3, impulse. Very easy. So now we're going all the way down. If you miss this trade, same thing you need to do. Wait for a nice correction. You can see that it's making 1 here now at the moment. Okay, and it always gives you those corrections. There's the type and the size of correction that you will be looking for is this size here. See here. It makes an impulse and it gives you this big one here. So here, anticipate something similar here as well. Then it is a proper correction, then you're ready to go down all the way to the round 12 rand 50 to the 12 rand 50 area. Okay, but when it plays out, we're gonna send it to the guys in the premium group. So that's US dollar ZAR. We've discussed Audi USD, USD JPY, Euro JPY. It's a very nice, interesting one. Okay, I'm just going through them the way they are listed on my watch list here. So if I just go to the daily here, Okay. If I just go to the daily time frame, you will see that this is what I was anticipating initially with this pair, that it will just go and do this. We had our blue box set somewhere around this area. Okay, and that blue box was based on the equal legs of this and that. All right, so you can see that it pushed up a little bit. We've got a limit that we use on the strategy to still make sure that our equal legs are still valid. So we've got the length, maximum length that we use as a stop loss here. If this length extends by a certain fib level, then we invalidate the equal legs scenario. Then it becomes an impulsive 1, 2, 3. Right? So that is if it extends by more than 1,618, then we start looking at the count differently. But for now, it is still valid, and we can see that we are getting a reversal. Okay, so the equal legs is still valid, still within the blue box. Okay, let me just see if I've located the blue box there. No, I've taken it off. Okay, so I'm going to switch this off. So you're just looking at the pattern. So right at the top, at the blue box area, at the reversal area, the blue box is actually the reversal area. Look what it is. What is happening here? We got the impulse, and this is the daily time frame. We got this nice, beautiful impulse there. Okay, after the impulse, you get 3 waves in there. And then after the 3 waves, this is what you are getting right now. This is what you are getting. So you get a 1, 2, 3 correction. Okay, I do not think that. Okay, so if this is still going to extend further, this is what the possibility is going to be. You're going to get a 1, 2, 3, and then this continues with a move to the upside like this. To just be a 1, 2, 3 pullback, and then we carry on. Or if when we get to the target, and we start doing this, then we are getting confirmation that this, and you will see that we've got this long-term trend line here. We've got this long-term trend line that has already been broken. Okay, so the break of a trend line is confirmed by a flag. So we need to get that flag to confirm that we're going to the trend has changed. The direction of the trend has changed. Okay. Right, so we don't have to now come wait for this flag here. There's still a trade here, because remember we're still on the daily time frame. So we need to come and look at what is happening here. We can still get this trade here. It's not short, because this is a daily time frame. I'm going to go to the 4-hour and see what we're getting there. Also here, we're looking for a small flag to come to the downside. So as you can see here, we are getting that flag that I'm talking about here. Getting that flag. And then you can sell that flag if you get it. Okay? Go to the, actually this is the 1-hour time frame. That's like, I mean, that's how the market moves. So look at this, you get an impulse, flex, 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 pullback. Same thing that's happening again now. It may be deeper, and then you go down. Okay, that's how it works. Chief JPY. Chief JPY. So this is a very nice, interesting one that shows you what happens when the apparent direction may change. So this is what we have here. I've got this impulse. Let me switch it off. I've got the impulse, and I'm getting this 1, 2, 3. This looked to me very corrective. So I was thinking, and I'm still thinking that that's what's happening, that this is going to give us a X, and then we're going to get another Let's push that away. Let's just fit that in there. So as anticipating that we're going to get another double here. Doesn't have to be a zigzag, eh? Remember, there are 5 corrective structures that have been identified. Double XY. So this is a possibility. Okay. So that's what I'm looking for, a reversal here. I'm looking for a reversal here. Okay, you may think that because it has now broken this trend line, it's going. So we're not trading trend lines, we're trading patterns. And this pattern is still a nice expanded flat. And it is still valid. Okay? Let's just look at the divergence. There is not much on the divergence either. But it's just not confirming the down movement. There is a small divergence. You can see that we're getting a lower low, getting a higher high, not yet confirmed, but we get this, looks like an apparent reversal there, not yet confirmed. Okay, so here is what it means when you have an alternative count. So what if that is not the case? What if this is not an X? What if this correction is done? Okay, so this is what you will have. You will still have your impulse. You will still have your correction. 1, 2, 3. And then this will be starting a impulse to the downside. Look at this, 1, 2, and this will possibly be a wave 3. Okay, here we would have actually, it has broken the trend line there. So breaking the trend line doesn't mean anything. It will only confirm that this is going down if we get something like this. If we get something like this, we know that we're going down. Okay, so this is how you trade, and this is how you know whether you're going to get a double or not. So if it gives you this and then it flags, we know that it's going down, and then that correction is done. But if, and it is a very good big possibility, if it reverses here with a sharp impulse, we know that it's going to make a double. We know it's going to make a double. It's going to make this WXY here. 3 waves, and it's WXY because it's not 5 waves. WXY. And it's not ABC because it's 3 waves. Okay, so this is how we're looking at this. So at the moment, we don't have a trade here. We are waiting to see what direction it's going to give us. So for this is how I would trade this one. Just put this trend line here. Wait for this impulse, and it looks like it's happening. You can see this big candle here, but doesn't mean anything. This candle can reverse here, can reverse at any time. So we only need to get a confirmed impulse. So if it does something like this, whether it is above the trend line or before, it doesn't matter. Even if it does it here, I'll be taking this trade. I'm anticipating that second correction. Okay, so it doesn't matter whether you get a double or a triple, you still be able to trade it. But when you get a triple, then it's even better. Okay. Next one, we've done Euro JPY, Chief JPY, Audi JPY. Audi JPY, very nice and interesting. Let's go to the daily. So you see, I trade all time frames. Some that are always inbox asking me which time frame do you use. Just because my charts are mostly in the 4-hour chart doesn't mean I only analyze. I only analyze in the 4-hour time frame. I analyze in all time frame, all the way from the monthly up until the lowest time frame. Okay, so this one is a very nice, interesting chart. Very clear structure. But you see how complicated all these letters are. Don't mean anything if you don't understand them. It means something to me because I understand them. I put it there just to guide me. Okay, I've put it there after identifying what the pattern is that is happening there. Okay, so I'm going to switch it off, show you the patterns. Okay, so here is what we have here. Clear impulse. Got the impulse there. Okay, here you've got another impulse. Okay, so what is happening there after that impulse? We change the color. We are getting an expanding flat. I'm calling it expanding because it has already broken the top of the impulse. Okay, so also it looks like we're getting this corrective structure here. This is a daily time frame, so you won't see it clearly. You'll see it when we go down lower. All right, so if this is an expanding flat, this is what it's going to come and do. Come break here. Okay, can even break a bit lower. So after doing that, I anticipate another move to the upside. Okay, what will that give me? That will give me, let's change the color. It will give me an A. It will give me a B. It will give me a C. Okay. You can see that this wave A is in 5 waves, but this wave C is it's a 3-wave structure like this. Okay, so that's what I will get here. So you can see that this sequence here is not complete until this length is the same as this. So this is why I see any reversal or corrective or any move to the downside as a correction. I'm going to be trading this all the way up until this is equals to C, because this sequence is not yet complete. Okay, and this is another possibility. You could get this doing something like this. One, two, comes and breaks here, comes and breaks here, and goes. It's just a possibility, and that will be a 1, 2, 3. ABC, simple ABC. Either that or this is already going here. But I'm more biased to this one. But it doesn't matter what my bias is, the chart will always show us what is going on. So this is the daily time frame. We're anticipating this move to the downside now. So let's look what the move to the downside will look like. We'll go to the lower time frame and clear all that. Okay, so you can see on the 4-hour time frame, we're already going down. Okay, we're already breaking down to this on this flag. This is the current. This is currently what's happening in the market right now. It looks like it's going down. It's a 4-hour time frame, so you may want to wait for something like this. On the 1 hour, you go to the 1 hour and check it like that, and then you go down with it to go and complete that regular flag that we're looking for. This one here. There's a flag. You get a corrective flag. You go down, comes and break here, completes your regular flat, and then it goes. Then you get 1, 2, 3 waves, and then we go. Okay, that's what's happening right now. That is Audi JPY, New Zealand JPY. Let me show you something very interesting here. We were looking at this one about 30 minutes before we started the webinar. I hope it's gonna let me do what I was doing. Let's go to the daily, maybe. My screen grabbing on the left-hand side has frozen, so okay, this will work. So now, how do I do this analysis? Let's look at this. This is how I analyze the market. I was actually just doing this just before. Okay, so I'm looking at this as an impulse. So I'm going to call this an impulsive red. Okay, and then I'm looking at this as a correction to this. So this is correcting that impulse that I'm looking at now. Okay, that's the green. So after the green, what do I anticipate? I anticipate that the red will continue, because after all, that's how the market works. Impulse, correction, and then impulse. You've got the impulse, and that's the correction. But what is this red correcting? So now this whole red is 1, 2, 3. What is this red correcting? It's correcting this impulse. I'm going to call it, I'm going to draw it in, maybe draw it in yellow. Let's do it in yellow. Okay. So after that, the red is correcting this whole yellow. So if that's the yellow, what should happen when we come down here? We should get another yellow to the upside. Something that is almost the same size as that. Then I've got a 1, 2, 3. Okay? But then what is this 1, 2, 3 correcting? It's correcting this impulse here. So you see how small corrections interlink to form each other to make a bigger structure. Okay, I don't necessarily have a trade with this on this pair at the moment, but we are trading New Zealand CAD to the upside. So you see here, this is where we are in the current market. The price is here. So we are anticipating that we're going to have this move to the upside. When we get here, we're going to wait for the impulse. We get the correction. We trade it to the downside. Okay, when you get to the downside, we're going to wait for another impulse. Get the flag, trade it to the upside. So you see, you already have 1, you've got 2, you've got 3 trades already in one pair. Okay, and we are trading this because of the Gatli. There's a Gatli that we have here on this pair. Just put it up. Okay, I'm not going to draw it with that. I'm just going to draw it freehand. This Gatli is on almost all the New Zealand pairs. I'm drawing it very terribly now. Let's try to make it better, even with making it quick. It's more visible on the 4-hour chart. There we go. Don't want to upgrade anything. So that's the Gatli pattern. See there? That's the 78 area, and then we're going up. Look what is happening now. It's the 4-hour chart. You're getting this flag. Trade it to the upside. This flag is even better on the 1-hour time frame if you check it. But the trade that we're running at the moment is US dollar. It's New Zealand CAD, which we bought the completion of the Gatli pattern. Okay, so now let's do the pound pairs. And this they are very interesting, these pound pairs. I'm going to switch this off. We'll start with pound New Zealand. That's the one with the most interesting structure. So those who have watched last week's webinar will remember that I was calling for buys on all the pound pairs. Okay, and because of this, okay, my chart doesn't want to move, so I just wanted to show you what's written here. Up here, I've just indicated that these are fractals. These are structures that are similar. Okay, so this thing is doing exactly the same thing all the time. Okay, let's do this. You get an impulse. I'm repeating what I did last week as well. You get an impulse. After the impulse, you get a correction. 1, 2, 3, expanding flat. You get another impulse. Undo. You get another. Okay, jumpy mouse. Right, impulse. There we go. 1, 2, 3. See, every time you get an impulse, you get a 1, 2, 3. Impulse, 1, 2, 3. Let's do another impulse. Another impulse. What do I get? I get a 1, 2, 3 waves. So you see, 3 waves. It's all about looking at the patterns. I get the 3 waves. There's another impulse again. Another impulse. Let's do this one properly. There's another clearly defined impulse. So what was I anticipating? I was anticipating another 1, 2, 3. And that was going to give me a running flat. Okay? Or a contracting flat. But the structure changed. It did not give me a contracting flat. It gave me a triangle. It's giving me a triangle A, B, C, D, E. Okay, and then after the E, I'll be looking to buy this pair here. Okay, so let's look what is happening here, because this is where we wanted to take the trade. Okay, let's clear all that. So, or before I even clear that, this is giving me an impulsive wave. This is 1, 2. You see, 2 is a corrective wave. We know 1 is impulsive, 2 is a corrective wave. Okay, and then within the 2, we are getting a lower degree 1, 2 again. Okay, so if we are here and we are on the lower degree 1, 2, we need to get a lower degree 4, 3 and 4, which is what we got. Okay, so after the lower degree 3 and 4, we need to get to a, see, from 2, we need to get to a 3. We need to get to a 3 here. That is in this degree. After the 3, we need to get to a 4, and then a 5. Okay, I'm going to draw it out of the screen. So which means here we are not complete. We still need to go to with 3 in yellow, correct, and then with 5. So we still have a long way to go to the upside. And we are getting this nice triangle here. We're getting this nice triangle here. Okay, so it looks like we are getting this impulse to the upside. It is not confirmed yet. We're not going to rush into this trade. We're going to wait for a clear impulse and a clear flag before we take the trade. Then that's not the only thing that's happening there. Here we've also got a Gartley pattern. And if you use your fibs correctly, you'll see that here it's exactly the 88 area, or the 78 area. Okay, it hasn't touched it yet. It might still go down to that level. If it doesn't go down, then it's fine. We're not worried. If I go to the lower time frame, just to the 1 hour time frame to see what's going on here. That's the 4 hour that I was on. See here, looks like we got that impulse that we were looking for. It's a very strong impulse, it seems. So the only thing that we're going to wait for, this will probably happen overnight. And it doesn't have to be a big flag because I'm on the 1 hour time frame here. And then we're going to be buying this for many, many pips to the upside. Remember, we still have wave 3 in yellow and wave 5 in yellow to complete. So we're going to be holding it for all those 3 waves, 3 and 5. Okay? So that's how easy it is to trade patterns. But it's easy if you have been trained and you have got a trained eye. Okay, so that's pound in New Zealand. Let's look at pound JPY. Pound JPY, as you can see here, I've got 1, 2, and within that 1, 2, I've got 1, 2. That's not visible. Let's put it up there. 1. I should get another 2 here. I can't see it. I've lost my wave 2 here. I should have another 2 in green here. It is somewhere here. All right. So in any case, we know that it's a 2, 1, 2, 3, 4, 5. Okay, but we still need to complete the red. 1, 2. So the red is here on top. The red 3 is on top here. So we're on wave 4 here. So this is what I'm anticipating, that we are in wave 4 and we still need to complete the wave 5. Okay, so this is why we are looking to buy the breakout to the upside here. Okay, it's a 4 hour. And you can see here you've got a very nice impulse. Anything that's happening here is not a change in trend. It's not a change in trend. That is a corrective flag. And we're going to be looking to go to the upside. And we know how to measure the length of wave 5. So that will be our target when we actually take the trade on this breakout here. Okay, that's pound JPY. But it might even come down to this level before going up. But it doesn't matter. We're only going to buy when it breaks to the top side, to the top. Okay, that's pound JPY. Pound CAD, we are currently in this trade. Pound CAD has completed its 1, 2, 3, 4, 5. What you don't see here is a long, okay, now you can actually see it. It's very clear. We've got this long-term impulse that we had here, and now we are busy correcting it here with ABC. Simple. We just need to get A. This actually is, yeah, we need to correct it with a ABC. Okay. Let's clear all that. So what you don't see there is this here. We need to get a higher degree. 0, A, B, C. So this is just a higher degree, blue, primary. So you can, why did it change format? Blue, primary. Okay, there we go. So that's what you have here. So you're gonna have that. A, B, C in blue. The yellow is just lower degree of the blue degree. So we are looking for upside. We're looking for upside on pound CAD. Okay, that's what we're looking for. But remember, I always say the market does not move in a straight line. There's another possibility that this, and that's very likely to happen. This may come. Let me take off my arrows here. This morning I actually thought, okay, we're already in this trade. I actually thought that it was going to come down here, gives us this 1, 2, 3, and then carry on to the upside. But it didn't do that. It just went. But it doesn't matter because we're already in the trade. So it may come here, tag, come down, tag or break, doesn't matter, giving us an expanding flat, and then our B actually will be here, giving us an expanding flat, and then go. But it doesn't matter. Right now, we go. We're targeting here initially. Okay, we'll see what it gives us. So we bought this pair here. We actually said we were buying it aggressively, and then we're going to add more when it breaks the flag. Okay, so it went up. Okay, broke the flag here. Some would have bought here. But then it came all the way down. But remember, when you're buying it aggressively here, you need to put your stop here. This is where we put a stop. So we said in the premium group, anybody who's interested in this pair, we are taking half positions. We took half positions around this area because we saw that it has broken out of this diagonal here. So we took half positions here. Give us this correction. Some of us would have added full positions here. That's fine. Okay, full positions, and then actually it didn't come down there. So you will see that here we got this flag, but the flag was never broken. It came all the way down. So with your stop here, just under the lowest, the low, you will not have been taken out. So that's why it is important when you take a trade, you place your stop loss and you let the trade play out on its own. Don't make emotional mistakes. Just because here we're going down with a big impulse, and some people were busy selling here, big selling here, busy selling here, stick to your initial bias and let it hit your stop loss. Because that was your plan in the first place. You planned a stop that if it hits a certain area, then your trade will be invalidated. So now just because it's going down here and it's going against you, and then you go and make an emotional mistake, you close out the trade at a loss, and then look what happens. It actually goes the way you want it. Okay, now it actually eventually breaks the flag. Now it's really going. By that time, you've already lost money. You are scared of this pair. Okay, so you place your stop, take the trade, place your take profit, and then let the trade run. When you get here, move your stop to break even, see what happens here. If you started seeing an impulse like this, and a flag to the downside, then you take off the trade. But if it keeps going, then you know that you're going for a big A, B, C, same time. Okay, that's how easy it is to trade this. Euro, New Zealand. So all the pound pairs have got a similar structure. Let me just go pound US dollar. I don't think I've covered pound US dollar. So pound US dollar, This one has actually completed all of its 5 waves. There is a red wave 5 here. If you're looking at my structure there, it's 1, 2, 3, 4. There's a red wave 5 here. I just cannot contract my screen anymore. I don't know what's going on with my screen, but that's fine. So here you can see that pound US dollar is giving you a nice flag here, and that looks like A1. You can see this red here. The red, that's when the pound pairs dropped last week. Was it Thursday or Friday? That's when they dropped. So we'd be anticipating that this length will be equals to this length. That is why the target is here. Okay, so this could be making an A, because this is wave 5. Remember, this is a wave 5 here in red. A, B, and then C. Okay, we'll only take downside on this pair when this is broken with an impulse and a flag to the downside. But for now, it is making a nice flag. This is not a trend reversal. You can see it's a flag. It's going up. And it's a very beautiful flag. It's going up. Same flag that you have on pound JPY. Same flag that you're having here. So we're looking for upside on this pair. Okay. That's pound USD. Pound Audi is similar. Euro Audi. Let's look at Euro Audi. Euro New Zealand, we actually closed off profits on wave 5 last week. We're going to do Euro Audi just now. Okay, so this one, very nice. Okay, impulse. Okay, we'll take this off. You get an impulse. After the impulse, you get a correction. 1, 2, 3. Okay, so this way it gets interesting. So this whole thing, you can see this just correction. So the only thing you need to figure out is when this correction ends. And if you want, and if you can trade in between the correction within the moves here. But this way people lose money because anything can happen within the correction. But where you want to trade is when the price gets out of the correction and then you're getting the impulse, because this is easy. But when it does, let's say if you bought it here, look at this deep retracement. Okay, here it goes actually. This one is not too bad, but if you bought it here, you keep getting this retracement, it goes retracement. Very slow, very slow. Maybe it even comes back here. It does. Most of the time, you won't hold the trade and let it come down here, because this is not a trend, it's a correction. Okay, so that's what we are having here is the impulse already indicated, and I'm getting this WXY. All right, so this WXY is correcting this whole impulse. This here is correcting this one here. So let's look how this one is playing out. So we have a W and an X. Why is this an X? Because there's a pattern there. Just use a different color. What is this? It's an expanding flat. Okay, so that is a W. Straight line. X. I want to get a different color. So, and what I anticipate here is that if I've got a W, I anticipate my red to continue like this with the same length as this. So this correction, this, I anticipate that those will be the same length. See here. But look, this is not going up straight. It's just going sideways, but it's still going to the area that we're anticipating sideways. So your WX may not necessarily have to be straight up there. It may be WX and your Y is right there. Still the same height. Still the same height. And this, and what you have there is, you've got a 1, 2, 3. Okay. And then, let me just get a different color there. get the structure right. Right. As you can see there, you've got two different patterns there. I'm going to do this one in green. Okay, let me clear everything and just show those patterns. So this is the one. This is the first pattern. 1, 2, 3, separated by a sub correction, expanding flat. Okay, and then after that you get another green pattern like this. 1, 2, 3. So you've got one separated by a sub and a regular flat. So it's a zigzag combined with a regular flat. So that's what you have. So here, what you're getting here is a correction to show that this is possibly the end of this correction. So when you get this flag here, it doesn't matter whether you get it here or whether you get it on the line or just outside. Either way, when that flag completes, you're buying it, targeting this line. And why are you targeting this line? Let's see the reason why we're targeting that line. So I'll show you what the correction is doing here, and this is the bigger picture that I am looking at here. This is what you could possibly have. 1, 2, 3. You could have a big regular flat. See here, it just touched. See how clean it touches. It just touches there and then comes down. So this is what I'm anticipating. I'm anticipating this big move to the downside if we get this correction nicely here. So we wait for this corrective flag. Whether it breaks out of the trend, does this, that's fine. But we are anticipating the move to the downside. At 144, we are currently at 152. That's about 6 plus 2, 800 pips. That's Euro Audi. Euro New Zealand. We finally got our wave 5. Or not really. Okay, so Euro New Zealand is looks like it's gonna change the structure. Let's take off the fib. Okay, because I cannot contract my screen. Just remember your wave 5 is somewhere here in that same degree. But this could change because according to the rules we use, this wave 5 is not at the required length. It's not at the right size length according to the fib levels that we use. It's still short. Okay, so what could possibly still happen here is that you're going to get a correction here on Euro New Zealand. You can get a deeper one. Doesn't have to go sideways. It can even go something like this. As long as you get the corrective flag, you're going to sell it, anticipating that it will come down here. Then you will get a 1, 2, 3 regular flat, and then we're going to go to the upside. And that will change the structure to be something like this. Then your wave 4 is this whole expanding flat, and then you still do the wave 5. So you see here, we know that we want to go up to wave 5 to complete. We thought it was going to go up here. Yes, we did make some money. We actually bought it right here in the blue box. Made some money. We took profits right around this area. Okay. And now it's coming down. So we need to get a corrective flag to come down. When it comes down here, what do we wait for? We wait for an impulse, correction, and then we go. Okay, so that's Euro, New Zealand, Euro Pound, same as the Pound Pairs. So we're anticipating downside with the Pound Pairs. So here you already got the impulse to the downside. Just wait for something like this. Wait for a flag like that. Take it all the way down. Initially targeting that. Okay, that's easy. Okay, and I think I've got about 5 more minutes. And we can discuss New Zealand CAT. So Here's an interesting question when you're trading, when you're trading Elliott waves. We did a full online course last week with my group. And then when we were done with the course, we said we are now going into practicals. Okay, we needed to do the practical application. And when we were doing the practical application, I gave them this chart. Okay. I'm not so we were done here. We did all the theory, we did all the patterns, we did all the structures. Everything, the whole theory, we knew everything then. The theory we were taught. All the fib levels, all the turning points we were taught. Right? And then we get a chart like this. Where do we start? What is this chart telling you? What are you seeing there? Now we need to start labeling this from scratch. There's nothing here. Where do you start? Where do you see 1, 2, 3, 4, 5? 1, 2. Somebody can say 1, 2. Okay, somebody can say 3 here. Somebody can say 3 here, 4 there, 4 there. I mean, where do you start? Okay, so that's what we covered in our course, how to label this chart. Obviously, I'm not going to do this here, but I'm just going to show you what is happening here. This is a weekly chart, and this is what we have. This is how we label this thing. I go from the lowest string to the highest string. Okay, before the correction. This is the deepest correction that we get. So what am I anticipating? I'm anticipating that this string will be equals to this string. So which means that I'm anticipating a sequence here, from this deep correction, that will be the same as the one before here. And that's my starting point. And after starting that, I'll be anticipating something like this. Here, another string, another string. Okay? Here, this is a lower degree. Lower than that, what do I get? I get another lower degree. See, we keep getting degrees and degrees. So what we were doing here in the group is to label a chart, an empty chart that is complicated like this one, and uncomplicate it. Okay, so I'm not going to spend time uncomplicating this for you. This for the guys that attended the course, that now understand how to get a chart like this and label it. And this is how this chart is actually labeled in full. See here, all the labelings there. You can go read that whole Elliott Wave book PDF that is on the internet for free. But if you do not know how to apply this like that, there's no way you're going to be profitable using the Elliott Wave theory. Okay, so we switch that off. So what we're currently trading here is this reversal here, and that reversal, one of our students, after learning advanced patterns, actually posted the trade, and we got something like this. Exactly like this one. And this was exactly at the 78. And it was confirming with the Elliott wave count. This is where we bought it, right on the trend line. Okay, so that's the weekly chart. I'm going to go to the daily chart. Okay, so on the daily chart where that bigger one, what that bigger pattern was completing, you see that we get another one. So we don't just trade only Elliott wave. We've got other confirming strategies like harmonics, which is very accurate. Look at this one here, exactly at the 78. When we took it here, got some pips. Even here, we're still getting some pips, and the target is still upside. When we are a couple of 100 pips on this one. So this is what happens when we're working with the team. We train the people and they give us the trades like this. Okay, when you've got people that have been trained and they are giving us trades like these ones, then you know that you're doing a good job. Okay, so we still have a lot of upside to this trade. So obviously it's not going to go in a straight line. I'm going to switch this off. It's not going to go in a straight line. We can see that now you're getting a 1, 2, 3. You're getting a 3 waves here. You're getting 3 waves. Even though it's an advanced pattern, you're getting this one here. And then after that, you're getting that, you're getting this 1, 2, 3 correction. After that one, you need to get a yellow. So that yellow will complete at the level where that yellow is equals to this yellow. And then maybe then you will get a deeper correction. Okay? After getting the deeper correction, then you start getting a WXY. And why am I getting a WXY? Because you could see that in the weekly chart, this thing was not even giving you 3 waves there. And when I was not giving you 5 waves, it's just 3 waves here. We don't force anything. So W, when the X completes, then we are going up. Because you understand this from the weekly all the way down to the 1 hour time frame. Okay, so I'm not looking for a trade there. You can just show the trade that we're currently running on that one, going to the 4 hour time frame. Okay, you can see that we already so many pips to the upside, and every single person in our group has taken this trade from the 78 here. Anybody who missed it on the 78 would have gotten it here on the flag. Okay, so we're looking for upside, target somewhere here, which is the same level as that, getting me 1, 2, 3. If it extends and starts making a 3, then that's even better. That's fine. Okay, let's see. Kachif. Nice one there. Switch on the labelings. This one has got a very clear structure. You've got a triangle, that what looked like a triangle. That is going to change the structure. You can see that this has broken out of here. So this was before I saw this. This is what I thought was going to happen here. I thought I was going to get a B, C, D here. And you can see here right now, D has just been invalidated, which means my triangle idea has now just been invalidated. But then if it is invalidated, what am I then looking for? Okay, so now I was looking for this as a pullback, 1, 2, 3. Now we look at this as a 3 waves, like that. Okay, now we are getting there. This is the correction. Your correction is this one. And this is your running flat. Okay, you see it's contracting. So the only thing that you need to get here now, then this is the 4 hour. Go to the lower time frame on the 1 hour. Get something like this. Take it to the downside. So you can see here my focus was that we're going to get to the E first, which it didn't go to. That's fine. Okay, it's anticipating structure, but doesn't change anything, because even if it was a triangle, I was going to trade it after the break of the lower boundary. And after the lower break of the lower boundary, I was going to wait for this to do this as well. So it doesn't matter. It just went quicker right now. So you don't miss anything if the price runs away. It doesn't run away. You always get a chance, a second chance. Okay, let's see if there's any other one that I can discuss now. We've discussed gold, maybe oil and Bitcoin, and somebody requested that we do S&P 500. Okay, we just do oil quickly. Oil is easy, it's upside, target 53. I'm targeting 53 here. Okay, here's what we're looking for. Currently, we are on this swing here. So here, any correction is just to give it momentum to go to the 53 area. And you can see my prices are on the right. So the 53 is right here. Okay, so this is upside on oil. We're still looking for upside on oil. And maybe at that area, when it gets to the 53, it will break this top, come down, makes a flat, break the bottom, and then resume upside. Okay. Clear all, Bitcoin. Bitcoin. Okay, initially, I thought this is wave 5, right? So after wave 5, I thought this was going to be a W, and this was an X, this is a Y. Okay, now I thought for this swing that is this long, you could not just have a WXY only, you needed to get a double correction. So I thought we were going to get a double correction, WXY, before you go up. Well, that's not what happened. It is actually giving us an impulse, continuation of this impulse, correction, impulse. And this impulse is now incomplete. We are currently in wave 4. We still need to go to wave 5. complete this swing. So Bitcoin, this correction, when it's done, if you want to buy, you can still buy Bitcoin, but it will come down eventually after the completion of this 1, 2, 3. It will come down eventually. What goes up must come down. Okay, when it comes down, it will give you an opportunity for those who missed it to get in on the bus. But for now, it's just going and going. But here, when it consolidates like this, you know that it's not going to come down. Consolidation means it's propelling for an upside move. And lastly, I'm going to do the S&P 500. So the S&P 500 keeps crawling up and up. It's crawling up and up. Let's go to the higher time frame, the daily. So I've got this ending diagonal here on the S&P 500, and we know that I'm still convinced that this is an ending diagonal because usually ending diagonals end with a push above the upper boundary or the lower boundary if you're on a bearish trend. But for an uptrend, it ends with a push on the upper boundary. Ends with a push on the upper boundary before coming down strongly. So we are currently here. And let's look at what the divergence is doing. I can't see my divergence. Let me insert that indicator that I use. I don't know what happened to my MACD there. Okay, that's my MACD. Okay, I'm gonna close one off. And it does not look, this is the daily, does not look like it's ready to come down yet. But this is not something that you want to buy. You want it to come down. You want it to come down. You want it to come down, maybe pull back in 3 waves. Okay? Before you actually consider buying this. Or if it comes down here, breaks the lower boundary, gives a correction, then we know that it's going to go down. But when it goes down, because this is wave 5, then you're going to get this as an A, and then you're still going to get another pullback, maybe even retrace there before coming down here. Okay, but this, what we are looking for right now is this here. If we go down to the lower time frame, to the 4-hour time frame, to check if there's any divergence here, because on the daily we can't see anything, which means there's still more upside. So 4-hour. So on the 4-hour, even on the 4-hour, there's no significant divergence there. But this is still crawling to the upside, so you must still crawl up some more. Okay, so you only buy this when it breaks this to the downside, gives you a flag, and come down. If you're gonna sell here, you're gonna sell at the break of the trend line to the downside. Okay. Thank you all for joining and thank you for watching. If you're watching this from YouTube, please like the video. And you are welcome to comment and give feedback on the video if you're watching it on YouTube. Thank you very much. If you want to join our premium group, my details are as follows. This is my number. My international number is as follows. It's +2782 7966 324. That's a number I use on Telegram, on WhatsApp, or for a call, for a mobile call. Or you can contact me on my email address. It's V for Victor Manena @gmail.com. Okay. That's where you'll find me. I'm also on Telegram. If you want to join my group, you can just inbox me, or you can find my link on Facebook. So my name on Facebook is Ndibu Victor Manena. You just type my name and I'll come up there. We also have a group called Pips Exclusive Forex. You can follow that group on Facebook as well. Thank you very much for joining. I'm going to post the webinar now, and if anybody has got questions, I'm going to leave that 2 minutes for questions, but I'm going to have that out of video because we've already gone so long now. Thank you. Cheers. Bye-bye.